All right, hey there, you Ninja Devils. Sam here with you. Today we're looking at the latest update to our initial balance indicator. Now we've had this out on the market for 4 years now. We've just enhanced it a little bit. These are subtle enhancements, but wanted to reintroduce this to you for those of you that may not be familiar with trading the initial balance or how it influences the day. I think this could be illuminating to you. Now let's start with just defining what the initial balance is. The initial balance is just the first 60 minutes of trading. It sounds like it would be more sophisticated than that. It's really both the opening range and the initial balance are kind of a holdover from market profile traders that are working in 30-minute increments, 30-minute blocks. So we define the opening range as the first 30 minutes and the initial balance as the first 60 minutes. All right, so let me just quickly give you a look at what I've got on the chart. This is just, I'm recording this on Tuesday, the 28th, last day of February. So I think I went back 6-7 days here. This is a 2000 tick. We're going to look at a few indexes, and we'll take a peek at crude as well, because this phenomenon that I'm going to show you is consistent across all markets. But we'll just use with a 2000 tick here. I wanted something to where we could see as we hit these levels. But not get down to the granular, so I wasn't going to do a 1 minute and take too long to get through it. So, but you can see what we're showing you with the initial balance indicator. I didn't want anything else on the chart. So the market opens, we show you the open, we give you the first 30 minutes, and we, again, color choices are entirely up to you. This is just what I use. So I use this yellowing color and these dashed lines for the first 30 minutes, and then once we hit 10:30. East Coast time, then the initial balance is defined and we go to these hard lines. Now I am color coding, and we give you the option to color code. This is just the colors that I'm using. We're color coding the initial balance high and low. So if it is untouched or a virgin IB, it stays in this bright green. Again, this is my choice of color. You can color it whatever you like. If it's untouched, it stays in green. Once it's been touched, then again, my color palette, I change it to white. Right, so if we look today, the initial balance wasn't tapped until like 2 minutes before 4 o'clock. Right, so you can see it right here. I think that's like 3:58, 59. In the very last sell-off at the end of the day, we broke it here, so you see the transition from green to white. Right here, we didn't hit it until, when was that, about 11:15. Dropped right back to the open, then back to hit it again. But here now we're white. So again, you change these colors to your liking. Now, what I've done here, again, because I'm only looking at the RTH to highlight the initial balance here. As we go through this, I'm going to take you through some of the features here via the initial balance drop-down menu. So you can display all days or just the current day only, right? So if you don't want to fuss with anything else, you just want to focus over here. Okay, well, there's an option for you. The drop-down, of course, is just a nice feature, so you don't have to open indicators and go in there and scroll down and find it. So it's just very quick. But I'm going to go ahead and turn all days on, because that will suit my purposes here as I take you through a few days of this. Do you want to show the pre-market or not? Again, it's not really relevant here since we're only looking at RTH, but that is an option for you. So if I turn it back on, you can see we're going to show you the pre-market high, the pre-market mid, and the pre-market low. Those are not things to be discarded. Algorithms will use all three of those. So if you're trading, again, it's up to the individual trader, right? But if I'm trading, I'm going to include the extended hours, because I want to know where those are, because algorithms will be using them. We give you the option to show the session background if you wanted to. I don't use it. Again, that's a personal preference. If you wanted to color in the range of the session. Again, much of these color choices are just like any Ninja indicator. You change them to whatever color you'd like. Let me just keep working through the drop-down list here. So I'm going to leave that off. The initial balance on or off. I could take it off if I only wanted to focus on the opening range. There are many traders that's what they focus on, for just the first 30 minutes for their tell on what's going to happen throughout the course of the day. So it's not mandatory. I think I would encourage you to keep it on, right? Because I think as we go through some examples, you see its significance. Now, we give you the option to show the extensions. So it's very common. Oh, let me get that back on. Very common Right there. There we go. For the market to move to extensions. So you see today we didn't quite make the 100. We made approximately 50 of it. So all we're doing here, and this is traditionally how it's calculated, we're just taking the range of the IB, and then this is up exactly 100% of it. Right, very common for it to go 50%, but on these really extreme days, you'll see it go 100, 200, 300, sometimes 400% the range of the IB, particularly if the first hour is consolidation, and then you get a big move later in the day. You'll see these levels. Again, algorithms will use anything and everything they can. Often you'll see a reaction at those levels. Okay, so am I through the list here? So that's the IB extensions on or on. The previous IB extensions, if you wanted to see those as well, it's another option for you. I'm going to go ahead and take those off. Do I want the prices or not, or just the levels? Right. I typically will keep the prices on. Show the range if you want it. Right, what the range of the IB is. So this one's 22.75. Today we had 18.5 points. That's giving you an idea of the range. Again, it's just personal preference whether you wanted to show that or not. And then if you wanted to show the statistics, and what that's going to do is just show you the, it's kind of tiny down here. But so we're looking at 6 days of data here. Of those 6 days, 100% of those days the IB was broken. The IB low was broken also 100% of the days, but the IB high was only broken 50% of those days. So just that alone should give you an idea that we've been in a down market, at least over the last 6 days. The average break of the IB low was 92%. Right, so we didn't quite make 100%, but we made 92% if you're averaging those days. And the break of the IB high, 35%. So the stats right here just give you some inkling as what kind of market we're in. Not that that's particularly relevant after the fact, but it might give you, it's just statistical analysis might be meaningful to you. I'm going to go ahead and turn it off. All right, so I think I've got what's available here in the drop down. Now let me just again review here a full day so you see what's within the indicator. So we've a session high low, the IB high here, again it's green if it's a virgin and it's white if it's been tapped. The opening range high, this is the first 30 minutes. The IB mid, right, also, right, will algos use it? You tell me, right, you tell me. Yes, they will. Here's the open, right? Of course, right? Algos will use that. Here we finally break, and then here's the pre-mid, high and low. Again, if you had extended hours on, you'd see those as well. And again, not to be ignored. Those are used often by algorithms. Oh, okay. So I think I've got everything covered here. But I just want you to see this distinction here between the opening range, i.e., first 30 minutes, and then here at 10:30, right? It's the first hour. Then we hit the initial balance, and the line drawings change. Now, one of the things people ask me, like, why is this such a big deal? Why is the first 60 minutes? What's the big deal with the initial balance? The reason you want to pay attention to the initial balance is because in a consolidation day where we stay contained within an initial balance, we tend to lose the interest of the higher time frame traders. When we have a big down day, let's see if I can find a good one. In the last 6 days, when we have a big, well, here's a pretty good ripper. Well, you guys remember this day. When we have a big ripper down here of these days, let me show the, let me get the extensions, previous extensions. Okay, so when we get these big days here, and this is a good example. So you see the initial balance here was relatively narrow in comparison to the kind of volatility we had later in the day. When we break the initial balance and we sustain a break, this draws in the interest of the higher time frame traders, and then you've got more participation. It's just the reality, right? So once we break out of the range, because there are days where you can just chop within the initial balance here, and the higher time frame traders just yawn at it. When we get a break like this, now they're interested. Now we add in the overnight, and you can see some really substantial ranges. Of course, the markets are so incredibly volatile right now that again, bringing in those higher time frame traders can add fuel to the fire, whether it's a down or an up. Okay, so I think this should give you some idea here. Here we went IB 100. You see here's a little reaction at the 100, and then here's the 200. We actually went, it looks about 2.5 on that day. So that should give you some insight. It's I would tell you that in addition to VWAP, these are the two most important levels on the board day in, day out. I would almost put them over VWAP myself. Right now, I trade them every day, so I have a real feel for this algorithm here. So again, to emphasize, and I'm just sharing this trade with you. It's funny. I've shared this trade with many, and few are comfortable taking it, because often, and part of that reason is it's just, you know, human nature, right? The market is screaming up towards it, and just your instincts think, oh my God, I can't sell it. It's going straight up. Well, I encourage you to test this if this concept is new to you, and if you don't track it. Many people don't even know what it is, let alone track it. And now, of course, you know, we're giving you an indicator that's going to do it for you. You could just draw a line if you wanted to, you know, at 10:30, say, okay, I've got you could draw a box if you wanted to, but you don't. I mean, you could do it yourself, but kind of a pain in the butt, right? To do it, right? How nice. This is a reasonably priced indicator. How nice to have something like this do it for you. Now, that said, now let me get you to the kind of the prize in the Tracker Jack box here. The trade I want to show you here is the first test of the initial balance high. Now again, I want to emphasize, if I can identify this as an algorithm, you can be damn sure that others have as well, right? And those that write algorithms are very much aware of it, and traders in general that are the majority of traders, professional traders, are very aware of the initial balance. And you're going to find that there are going to be days where it may be news, and may be for whatever reason that there's a reason that the market is going to push beyond the initial balance, and you'll find that it's fairly evident on those days when the intention is for, call them whales, institutions, what I call them whales, when the intention is to break the initial balance. You'll often see a huge push of volume, because they know they know what I know, right? There's an algorithm sitting right there that's going to fade them. So when they push through it, particularly if you're using a footprint chart, you can really see the emphasis there. And I'm not going to take you into footprint charts here. If you want to see that, you come over to our Discord here, which is now entirely free, by the way. But that's an option for you, where you can really see inside the candle, and you can see the delta flip, and you know when you as well, you'll be able to see when they intend to break it. It will be very obvious. Okay, let's just use today here as we'll go back a few days here, and then we'll look at a few other markets, because this is consistent on all markets. Okay, well, today's a good example, right? So we open, we go up. Here's the opening range, right? We see it in yellow. So this is when the IB is forming here, we get a high here, but it's not considered technically the IB until 10:30. So we're giving you a dotted line here, as this is the potential pivot high for the initial balance, but it's not confirmed until we get to 10:30, obviously, right? So here's the opening range low, right? So the market's it was kind of tight today. There was not a lot happening here. It was well contained within the value area, and then we started to get some volatility, right? Obviously, it expanded as the day went on. So let me just do this on a 2000. Here's the push. Oh, pardon me. Here it is. Here's the push right into the first test of the IB high. Now, if I zoom in there a little bit, this is primarily a scalp, right? Something to look for as a scalp. So I will typically trade it with a 3 lot. My scalp targets would typically be, well, depending on the day, 3 to 5 ticks, right? I'm looking for 3 to 5 for the 2 scalps, and then I like to leave a runner, because, and this is a good example, today after we first tested here, initial push was, what did we get there? 10 ticks, right? So we popped up. Here's the first test. Come back down. We got 10 ticks. Back up again. This is an effort to try and break the IB. Since they can't get any legs here, what do? We fall right back to the open. So the advantage here of leaving a runner is you can get this kind of move. Now I personally don't allow for any. The max I'll allow for is 16 ticks here. So you can see today, once we hit it, we went 5 ticks the other direction here. So if you had a runner, and you don't, it's personal preference as to whether or not, once your 5 are out, you want to go to break even or reduce the risk. That's what I do, right? If I get my scalps out, I'm going to reduce the risk by bringing the stop down. But I know that often there'll be volatility around the IB high, so I don't want to just take 5 and run, because this is a great example today. Just for fun, right? For those of you that know what we teach over here, where do we fall, right? Right to a golden zone. Okay, so actually I think it was tick on here from the absolute low. Right here, we got a wick through it. But that ended up being a good trade. Anyway, so back to the point here. So from this little channel, but just to the open, there's 43 ticks. IB low stays a virgin, right? Never tested until 4 o'clock, right? And that you wouldn't be looking for this trade at 4 o'clock, way too late in the day. Okay, so I would take it up to 345, but here this is damn near at the close. That I wouldn't fuss with it then. Let's go back a day. Just take a look. Just take a peek. Now, some days it's going to be a little tricky, right? The advantages of a footprint are definitely. They're definitely. I mean, there's always advantages to being able to see inside the candles. So here again, next day we're identifying the opening range, first 30 minutes, right? So a little ping here. IB high stays a virgin, never gets tapped. We come down here. Here's the first test. Now this is often you'll see this same kind of thing here. There'll be volatility around the IB. This is very algo thick, right? This is not, other than the first test, this is not a great place to be entering, because it's so combative here between bulls and bears. If you're testing the IB low, bears of course want it out, right? That'll bring in the higher time frame traders. Bulls are doing everything they can to get it back in, right, to stay in the IB, maybe head back to VWAP. So you see the volatility here. Now this is a day where you didn't get a lot. Here's your first test. It's kind of personal preference, right? And certainly looking at the nicey tick would be helpful here to see if you're in an extreme. So we got 11 ticks here off of the first push back in. I think I should have the tick up, but that would be helpful to look at the nicey tick, see if we're in an extreme, i.e. 600, 800 or beyond. That just would give you more conviction here to take the trade. We bump around it, and then we break, and then you'll find that this is very consistent. Once we break, the IB will often be the support or resistance, whether we're talking high or low. My suggestion to you would be it's a much better trade when we're coming from below into it for that kind of reaction than if it's inside all day to have it come back, test, and then go again. Yes, there are days where you'll see that, but it's less reliable than when we're out coming back in, because again, bears are going to make a huge effort to keep it out, right? Because they want it to stay out and try and get this kind of a movement here. We're in. Nope, we're not staying in. Let me go back a day here, just because you need to see this. And what I would encourage you to do is trial it. If you don't own it, trial it. And if you're not familiar with this trade, you can trial all of our indicators for 7 days. Right? Do your own research. Now, don't take my word for it. I mean, I'm showing you the most recent data here, but you're not going to have any enough conviction to take the trade unless you test it yourself. Now, note here, it's really tight here. You see where we go, where we are still green here, i.e., we haven't broken. It's actually, we haven't touched it here. This is a front run by a tick, right? And you're starting to see this, right? This trade will get front run by a tick or two. We're seeing that more and more, right? Cat's out of the bag on this to some degree. But take a look here. So here's where we break and we go 37 ticks. Right, that's 462. Right, so if of course your first 5 are again up to the individual. In my case, my first 2 are out plus 5 and a runner here. You got to use some judgment as to what you're after here, because you gave it all back down for another test again. Right, bears want it out, bulls are trying to get it back in. Now what do? We go right up to the IB high, right? So it's still green. We go up here, we go up to the IB high, we go through by 8 ticks as it comes back down. Well, if you went back to the open, there's 42. If you rode it all the way, I had some traders today that, of course, we focus on this trade in our room, rode it all the way down. There's 89 ticks, right? That's why you want to have a runner, right, for that kind of a move. Now, are you going to get it swing high to swing low? Probably not. I wouldn't have taken it. I would have taken it if we got back to the mid. I would have taken it right here. Been very comfortable with my 56 ticks. All right, that's just me. Let's go back a day here. So I don't want this. You can do this here, but I just want to make the point here. I want to show you some days where it fails as well. So here's a day that was tricky, right? The tick was very low here, but as this came back in, so here's the first test we do go through, right? So there's some judgment here that's necessary. We go through, we went through by 14 ticks. Now, some people will wait until it comes back in. I'm going to be very influenced by what's happening with the nicey tick. We were very low. I think it was the tick low. I think it was tick low. Certainly it was tick low in the morning. We were minus 800, and then we snapped back. And if you were waiting for it to get back inside, again, you're not going to get tick high to tick low, but there's 30 ticks, right? IB high stays a virgin. Here's no, back a couple of days here. Here's a good example here. You see the volatility when we first hit it, right? This doesn't count, right? This is not the IB. This is the opening range here. We're still not to 1030. Now you see the volatility here. So this takes a little judgment. This is where a footprint chart can be very helpful, right? If you're just looking for the scalps, you got 8 ticks. I mean, you know, 2-3 lot, nothing wrong with 8 ticks. Back down, right? This would be an example if you were too tight with your stop, you get your scalps out and your runner is going to get stopped on the kickback. And then, you know, do you have it takes a little conviction and some screen time with this to be able to re-enter and try and get back to the open or VWAP here. And ultimately, what do? Right, here's where we hit the IB high. What'd you get there? There's 26 ticks, right? So from IB high to IB low, right? And then all of this happens, right? Now, it's the first test only. After the first test, right? That's where the high probability trade is. Now, right? Is it? Again, this is a decent example here. Coming back from inside, bulls, I promise you, are trying to get it out. Bears trying to get it down. Now here, again, reaction. This is we call this riding the rail, the IB rail. Terrible place to enter. Very thick with algos. Big. This is a true fist fight between bulls and bears. You do not want to enter. Well, let me rephrase that. This is a dangerous place to be entering the market. Either side, you might as well just flip a coin. All right, let me go back one more day here. See, I'm trying to get you an example where it failed badly, but I don't have one. So well, here's IB highs aversion. Here's our first test here. You got a little no, it's still green here. Here's our first test right here. What do we get on the first push? There's 29 ticks. Really common to get 30, 40 ticks on it. But scalps out, let the runner go. You come right back into, I know, it's easy in hindsight. Come right back into what was clearly resistance. I mean, that's the opening range low. That's the low of the first 30 minutes. Again, algos will use anything they can, and they'll use that. So back here to this level, you got 30 ticks. Okay, you're not disappointed, I would imagine. All right, again, I have shown this trade to thousands of traders. Right, very small percentage take it. You know, and it's interesting, right? I could show this to a million traders. A very small percentage would take it, and each would trade it a little bit differently. But I'll leave it to you to decide whether or not there's a high probability event here. Let's just quickly, as I'll buzz through a couple of the markets here. Here's the YM, right? It's no different here, same algorithm, right? Here's the first test. Went down, went through by 16, right? So here we go down. You get a doji here. We come back in. Once we snap back in, right? Depends on the day. Where's the nicey? Where's the tick? Right? Once we're back in, well, there's the open. Right? We get what was there, 126 ticks. Are you going to get all of it? You know, probably not. But right to the IB mid, there's 89 ticks. Virgin IB high. Here, this doesn't care. Right? Stays a virgin. If it's green, right? That's my color palette. If it's green, it's untested. Here we get a little chop around it. Here's the test. Down we get back in. 26 ticks. This stays a virgin. Here's the first test here on what is this? This is last week. Here we go up. We go up 27, right? So when it's going up like that, you don't want to just take it blindly. We start to come back down, right? Often I'll wait till it comes back in, back to the opening range, or back to the open. There's 71 ticks. Never test the low. Here, well, this is a good example. Here's one where we fail, right? So this was the crazy day. So we hit it here. There's a little reaction here, but likely, best case here, you got your stops out and your runner takes a stop. So you would be either scratch or a small loser here compared to all the days where you get a massive winner. Here's the YM. Here's the first test of the low. Yeah, I think you guys are starting to see it, right? So here's the test, right? What do we get there? There's 110 ticks. Here's the IB high. Now we're out here. This would be you'd either take a stop, or maybe you got scalps out here. You see that this is very common, right? When you watch this trade long enough. Here, this is the battle, right? Bulls are trying to get it to rip. Bears are trying to get it back in. So now when we test it here, yes, you get a reaction. Yes, there's a trade there, but it's not the high probability trade. It's the first test where you can take it with conviction. This one stays. Yeah, well, here's another one. All right, here's the first test. You got 30 ticks there. That's so I don't go too long here. Let me go back a little bit. Here's today. All right, Tuesday the 28th. Here's the first test in the NQ. Right, because how do I know? Because it's green. We get there, we get a little squirt goes through, we come back down. What's there? There's 45 ticks. Right, back up. Right, this again, testing at the close of the market, you wouldn't take it there. Nothing on the IB high. There's a little volatility here, so this would have been a loser this day. Right, probably you're trying to get. Oh, you might have got your scalps out. You might have. Well, shit, you actually got 20. I'm at a 25.84. That's why. 28 ticks there. That would have been dicey, right? You might have gotten your scalps out and scratched the runner. Dicey on that one. Let me bring this up a little bit. Here's your first test right here. Right, so we go, here's green. Here it is, right? So what do we get there? There's 117 ticks. IB high does not get tested. Oh, here's the test here. This could have been a loser. This goes down, right? If you tried to front run it, right, you're stopped out. If you waited for it to come back in, you got to push to the open. You got 130 ticks. This was an unusual day. Here, this is a little hard to see, but here it is. If I open this up a little bit, here this is opening range. Here we're green, and then we go to white. So this is our test from here. So here's the test. You got a couple of wicks. We come back in. Well, there's 17 ticks. If you rode it all the way to the opens, often you'll see it kick to the open or to VWAP. Well, there's 300 ticks approximately. Over here, here's our first test. Here we go through. I mean, again, this is, if you're watching a footprint, this would be helpful. We come through, we stall back down, right? So if you're, well, let's do it that way. So if you're entering off of it, returning into the IB, well, there's 169 ticks. And we'll wrap here. Here it's hard to see. It's green. Let me get that. It's hard to see, but here's the low. Here's where we tag it. It's only green for a bar because this is literally the tick low. We go to the open. There's what do we get? Well, you got if you took it to the open, that's 138 ticks, 690 per contract, right? So if you took your scalps are out and you left a runner, 690 on that one. Okay, let me just wrap up here and just show you that it doesn't matter. Market doesn't matter, right? Much like most algorithms, right? It'll be consistent. Here, I'll try and wrap it up here. RTY. It's a little more volatile. Here's the test. This is why you don't necessarily want to just jump or have a limit order there. This you probably get your scalps out and you got tagged on your runner got stopped, so probably a scratch there. End of the day, so you wouldn't take that. This is close, right? This is a bit of a front run here. They're hitting that at 1025. Right, starting to see it because I've been teaching this for some time, right? It's not a mystery anymore. Again, if I can figure out, others can as well. Here's the test. Right here, so we're green, right? We go down, right? We come back in. What's there? That's 28 ticks. IB high stays a virgin. And let's come over here. Here's the IB low doesn't get tested. Here's our first test. We wait till we come back in. There's 62 ticks. Now back out, right? It's only the first time, only the first test. That's the one you can count on. This is our crazy day. You probably got stopped out here, right? Now, see when it's breaking here. Now you got to have the experience if we're coming back here, look at those candles right now. This is a 450 tick on the RTY. That's a pretty good rip back in. If you waited till you got here, again, I know that's hindsight. If you waited here, there's 28 ticks. But it's the kind of thing, right? When it's going straight down like this, you're not going to just take it blindly. You got to see some signs of some strength coming back in. Decent, but let's say you scratch that one, or had a loser, right? Again, the amount you're making on the days when it hits. So we stay a virgin here. Here we get, oh, you probably loser here or scratch here. We tag it. You got 8 ticks. So if you're running, if your scalps are at 5, your runner gets stopped here. So that's a scratch here. We just missed getting it here. Go back. RTY not quite as reliable as the others. The ES and the Dow are incredibly accurate. Okay, so that's my 6 days there. So let me just pop over to crude as well. So here's crude today. Here's it's very, what have I got there? It's a 1500. So it's green. We get two ticks to go through, right? And then we go 82 ticks straight up. Right, IB high stays aversion. Here's the kind of day. This is an example I'm talking about where you're just entirely self-contained within the IB. So the first thing to get hit is the IB high here. This goes through by a couple of ticks. That happens to be the opening range high. So it's hitting it right at 10 o'clock. Now different time, right? The initial balance in crude is 9 to 10, right? So we sit here. We go coast to coast, right? Coast to coast. We hit the IB low. That's 1226. And then we snap from here. We go to the IB mid. There's another 70 ticks. So pretty good day here. If you were doing nothing but trading the first test of the IB high, right? You disappointed with that day? I'm going to assume not. Here the IB low stays a virgin, never gets tested here. Right? Not as good today. This day. Here you're up. If you took it as it came back in, you're likely to full stop here. Right? Again, it's not 100%. Right? There are days when and particularly with crude, right? You're going to have days where volatility is going to take it out. So let's say you took your stop here. You made about $2,000 over here. You took your stop here, so maybe you lost 300 there. Here we go. This stays a virgin. There's a front run on it. Here we go through by 2-3 ticks. We come down. Oh, let's say you took it to the opening range high or the IB mid. There's 600 ticks or $600 per contract. Here you got a little bit. Here's where you got. It's green for just an instant, right? Because it hits it right as it hits it. You get the reaction. There's 19 ticks, so scalps out. Runner probably. I wouldn't give back 19 ticks there. Here's one where you probably took a loss here. Probably got stopped out here. You got a little bit of a reaction. Maybe you got as we came back in on the wick here. Maybe your scalps got out. So best case, this is a scratch. Best case. Okay, that'll do it. Okay, guys, that's all I've got. Let me. Oh, I don't think there's much. Anything that's in the parameters here is going to be the same thing that you see here, other than color choices here. I won't bore you with that. What I'd encourage you to do is trial it, right? All of our indicators, 7-day full working version. Right? Put it on your chart if you're not using it. Put it on your chart and watch, see, trade and sim. If you have a footprint chart, all the better. If you can track the NICE tick, which you can in Ninja, right? So if you're getting that data, track that. Look for that in the indexes, particularly the ES. Well, the ES and the YM. NQ has its own tick, but it's not nowhere near as reliable as those two. But the two best are the ES and the YM because we can use the NICE tick in conjunction with the location here, and then looking for that reaction, right? So it takes a little time to get used to it and know what to look for. Ideally, what you're looking for here is trapped traders, right? That don't know that they're hitting the IB. So oftentimes you'll see people like here being a good example. You'll see longs they're going for a big move here. They're trapped at the top, and they will influence the results of the trade, because if they're going long here, not too long before they got a cover, and that will further drive it down. So you'll find that quite prominent. And so again, additional advantage of having a footprint chart is you can see the trap traders here. Our buy side momentum will show you stacked imbalances. Often you'll see a stacked imbalance right at the IB high, and they can be on the wrong side. So you can get trapped longs here. The market starts to sell off. They have to cover. That gets your scalps out, and then if your runner goes, all the better. All right, guys, that should give you something to work with here. If you're not familiar with this, hopefully I opened your eyes a little bit. If you're not familiar with this trade, trade it in sim while you get used to it. Try it. I think you'll like what you see. Okay, with that, I'll wish you guys a good evening, and we'll talk to you next time.